Okay, fam, welcome back. So today we're going over our buy, sells, and dividends for the week, which in this case would be September 15th to September 21st. So with that being said, let's get it. Okay, so on M1 Finance, not much has really changed here. We basically just got 1 penny from PSEC. Again, we haven't really been focused too much on this portfolio. This is going to kind of come a little bit more after the crypto bull run. We've been holding off on this portfolio intentionally for a reason. It's not just because we don't think the timing is right. It's more than that. So basically 1 penny here. I'm going to go over to the Grayscale Trust. You guys can see the Grayscale Trust. Nothing really changed here. We're kind of just sitting on the cash, sitting on the positions. Still underwater by 50%. Of course, we kind of expected as much once they hit that 75,000 peak. It's probably going to take a little time to blow off some steam before eventually rip into the next big move to the upside. We're going to talk about Roaring Kitty and the recent Darkpool transaction here in a minute. We'll get into that. There's a reason why this is pulled up. So in terms of dividends, let's actually go into that first. So dividends that we received this week is from QDTE, XDTE, YMAX, and YMAG. Again, I'm pretty sure we went over what the YMAX and YMAG dividends were, but they're pretty much about, I think, like roughly 20 cents on the week or something like that per share. So not too bad. In terms of buys on this portfolio, we bought TMF, CLSK, which we actually closed out right before the Fed announced the rate cuts. We bought some Coney and Filecoin in terms of native cryptocurrencies. And we also closed a profitable trade for a call debit spread on Wayfair. So let's go ahead and get into that. All right, so first thing I'm going to go over here is, we'll start with CLSK. So basically, we opened up a cash secured put on CLSK, one contract on the 13th, and then closed it. I don't remember the exact date, but we closed it recently for it cost us $1 to get out of the position. So basically break even. So yeah, you can see it here. So September 13th, we opened it. September 17th, we closed it. As you guys know, the FOMC meeting was on the 18th. We weren't sure how it was going to go, so we decided to pull some trades just in case to kind of hedge against the event. Turns out that things actually turned out to be more bullish than most people were expecting. We thought that's how that was going to go, but couldn't be entirely sure. So basically cost us just $1 to get out of this. All right, so now I'm going to go down to TMF. We'll go over that one next. Okay, so TMF, what are my expectations for TMF? Well, here's what I think is going to happen, okay? So TMF is meant to be an inverse the Fed move. Whether the markets go up or they go down, in my opinion, they're going to be going up. Okay, I believe that very strongly. TMF doesn't really have to do so much with the direction of the market. What it has to do with is the fact that it's basically a play on the Fed, okay? So when the Fed raises rates, regardless of market direction, theoretically, the price of this should come down, which gives, dip buyers the opportunity to buy on the dip. And then when the price of this thing is going up, that usually happens as a result of the Fed cutting rates. So the best time to get into these, in my opinion, is right about the time that the Fed's getting ready to pivot from holding rates to cutting rates, which just recently happened. And then the best time to get out is when they're done cutting rates. Okay. But I expect this thing to still go up regardless of what direction the market takes. Again, I do suspect the market's going to go up through the end of the year and all of next year. So yeah, basically what I'm thinking here is that TMF and the markets are going to the upside. Okay. So TMF is going to go up as a result of the Fed cutting rates, and then the markets are going to go up as a result of the monetary easing. That's what I'm believing is going to happen. So you guys can see we only have 5 shares here, but I mean, 5 shares is more than 0. And we bought just a little bit here. Looks like on the 16th and the 18th. So 0.78 shares and then 0.4 shares. So Coney, why have we been buying Coney instead of MSTY? You guys are probably curious about that. Well, because we already have a lot of MSTY. We also have a lot of Coney, but we actually have more MSTY than we have Coney. The other reason why we're buying Coney well in advance is because Coinbase usually goes up as a result of the entire crypto market going up. So that's not just Bitcoin, but altcoins too. And like I told y'all, I believe that Bitcoin is probably going to hit its peak within the next probably about 6 to 8 months, and altcoins will be moonshining during that time frame. So sometime between, in my opinion, January to May of next year is when we're going to see Coinbase hit all-time highs. So we want to load the boat on this before that happens, okay? So you can see our average cost basis here is still quite high, $23.79, but not to worry. I do think that Coney could probably hit like $30 to $40 a share by the time the bull run is over. I do think that's possible. And MSTY, I could see it hitting somewhere between $30 to $50 a share. All right, so going over the transactions here, you guys can see that we bought basically 2 shares on the 18th, 3.08 shares on the 19th, and 3.11 shares on the 20th. Okay, so next on the list here, well, we have Filecoin. We'll talk about that in a minute because that's completely separate portfolio. So let's now go ahead and go over QDTE. So we still have our 100 shares. The price hasn't quite fully recovered yet, but again, you guys got to understand these things pay out pretty substantial dividends. They do have options trades, that sometimes they may win them, sometimes they may lose them. That also affects the price. I know because we trade options ourselves. So currently only down 9%. In my opinion, that's not that bad. As the Fed cuts rates, we suspect the markets are going to get more and more bullish to the upside. So $19.53 here in terms of dividends. Okay, so going down to XDTE. Yeah, I don't know if you guys have heard the rumors about Mark Cuban wanting to buy X from Elon Musk. Look, I'm going to tell y'all right now, that's not going to happen, okay? Elon's never going to give up X. He wouldn't have bought it for $40 billion or something like that if he planned to give it up. And the amount of money that it cost Elon to buy X, formerly Twitter, is multiples more than what Mark Cuban is worth, okay? He will never be able to afford to buy X from Elon. And even if he could, Elon Musk is not going to sell it. I'm pretty confident about that. So XDTE, you can see average price here, 53. Again, we have roughly about 79 shares, trying to get to that 100 slowly over time, $15.63 in terms of dividends here. XDTE usually doesn't pay out as much as QDTE, and the S&P is more diversified than the NASDAQ. The NASDAQ is tech heavy, so it gets hit a little bit harder to the downside than the S&P, but it's also more aggressive to the upside as well. So because there's more stability in the S&P, that's, in my opinion, the reason why the NAV has remained more stable for XDTE than it has QDTE. So now I'm going to go over YMAG. I do actually think it's pretty cool that they're paying out weekly dividends on the YMAG and YMAX ETFs. I think that's interesting, and the rest of them as well. In terms of my personal opinion, I don't really have a preference. I mean, it could pay weekly or pay monthly. Either way, I'm good with it. I don't really care. But at the end of the day, what matters to me is that the price still has potential upside over the future, or at least to sustain its level, like SPYT. So $47.85 from YMAG. And again, that's just a weekly payout. So, if you were to calculate that out for 4 weeks, that would be roughly about $200 a month. That's what's known as forward estimates or forward earnings. We're not a company, but you know what I mean. You get the idea here. So, in terms of YMAX, this one was actually more, which is interesting. I'm not really sure why that is. Maybe it's because it's more diversified. I don't know. But it's $61.84. Again, if we kind of multiply that by 4, that comes out to roughly about $250 a month in total income. So the total dividends for that comes out to $144.86. If I minus the $1 transaction from CLSK, it's $143. Add the penny from PSEC, it's now $143.86. So we did also have a call debit spread that expired, or not expired, but that we cashed out in the money. We cashed out this one a little bit early. The cost was $800. We were expecting to make $2,700, but then the Fed happened and the price went up to where we thought it would be, and we were kind of like, okay, yeah, it's going to get above 55, and then it pulled back, and then we're like, okay, screw this, we're getting out. And then it just went back up to 55 anyways. So yeah, kind of got out a little prematurely, but better to lock in profits than to be sorry later, so to speak. So yeah, you guys can see here we received a credit of around $1,470. So you basically take this minus the $800 that it cost us to get in, which again, you can see that down here. We got in on the 3rd for $800. You can see that is a cost, or what's known as a debit. And then we got out for a credit greater than the debit. So that total comes out to $669.58 for that call debit spread. We also received $160 in premiums. This was from NVDL. We do have a position on that. So the open for that is 9/19/2024. Cash secured put, the closing date is going to be basically next Friday, so the 27th, and that's $160 times one contract. And so the total that we made for the week is $974.44. Okay, so NVDL, this one's interesting. This is basically a 2 times leverage that of NVIDIA, so it's actually quite a bit more volatile than NVIDIA. So something to keep in mind if you're looking at this. So yeah, we basically just put in a put for $52, basically a 30 delta. We didn't look at any TA on this because we don't really feel like it's necessary at this point. I mean, NVIDIA is just kind of chopping around. It's not really doing much of anything. As a matter of fact, if I show you guys the chart, you'll see what I'm talking about here. So yeah, you can see it's kind of just chopping around. It's not really doing much. So we're getting kind of this triangle pattern. I mean, it could be bullish, could be bearish. In my opinion, it's going to be bullish. I'm pretty sure I read some news somewhere about companies are already ordering some of their Blackwell chips. So we'll probably see that reflected in the earnings in Q4, which in my opinion is going to be very bullish for NVIDIA, and the price is likely going to moonshot to all-time highs on the next earnings. That's just a guess. Of course, I can't guarantee it. So, take what I say with a grain of salt. Do your own research on this one. All right, so now that I've gone over that, there's a couple of things I want to talk about. So we're already positioned for crypto, okay? We were planning to buy till basically through the middle of December, but the job kind of pulled some funny business. So if we have to cut them off and be done with them, so be it. We've been planning for a situation like this since day one, okay? Since the day I walked into that place, I've been planning for my exit. It's not like I just walked in there and was like, oh yeah, I'm just going to work. No. One of the sayings that I try to always live by is always begin with the end in mind, okay? So from the moment that I step into a place, I already have a vision of what it is I'm going to achieve or accomplish in that place, okay? And an exit strategy in place, regardless of whether things turn out sour or good or whatever, okay? So we've been filling our crypto bags for quite some time, all right? We've been buying up Filecoin, but basically I'm going to tell you all this, okay? Between Filecoin and the call debit spreads that we have set up for the end of the year, we could realistically make anywhere from $100,000 to $150,000 just from those positions alone, not including other crypto positions we have or money that we make from futures or any of that, okay? All right, so in terms of buys here, we'll go over the history here, go down to see all. Looks like Coinbase might have updated their UI here, so that's interesting. Okay, so again, if I'm not mistaken, I believe the start of the week was on the 15th. So you can see we bought quite a bit over this last week. So 14.61 coins here on the 16th, 13.9 on the 15th, roughly about 14.5 on the 17th, 7.3 on the 18th, 7 on the 18th. We bought half of this before the FOMC, half after, just because we kind of wanted to make sure that we weren't going to buy everything until after we knew for sure what the Fed was going to say. It's just a precaution move, nothing more. So 16.1 coins here on the 19th and 15.8 on the 20th, which was yesterday. So we bought a lot. We have roughly about 5K position of Filecoin. Again, Filecoin could easily do a 15 to 20x. I mean, the all-time high for Filecoin was $240. Our average cost is $6, so that's a 40x. 40x 5,000 is 200,000. Is it going to go that high? I have no idea. 50% of the previous all-time high, in my opinion, is realistic. That would be roughly about a 20x or about 100,000 on $5,000. And we have some of these other ones too. Okay. We'll talk about what the biggest narratives, in my opinion, are going to be in the next crypto bull run when we talk about the altcoins. But that's pretty much what we bought in terms of native crypto. So there's that. Not really too worried about the money. I mean, if we don't accumulate another dime more worth of crypto, it's not going to matter because we're going to make bank anyways. And again, the bullish seasonality, the elections and all that stuff, the elections and the Fed and all that. Well, the Fed's already behind us. We know what they're going to do, but the elections will be behind us in a couple of months, and we're going into bullish seasonality and monetary easing. So it seems pretty obvious at this point that crypto is about to go on a huge bull run. In terms of the call debit spreads we have, so I don't remember exactly the total number of all these different debit spreads. So GME, we're expected to make about a 2x on our money, so it's about 1,700. CLSK, well, we already did Wayfair, so CLSK's total combined profit should be expected to be about $30,000. And let's see what else. So we have Snap is expected to make about 2,000. American Airlines going to be roughly about, looks like about $1,100. So roughly about 32,000. So all these call debit spreads we're expecting to be in profit by around or before the time of their expiration. This big fat juicy trade right here, you see the 100 debit spreads. That one by itself is going to be about 24,000 when it goes fully into profits. So yeah, we're not too worried about the whole job situation. It's whatever at this point. We have plenty of passive income and active income on the side. All right, so let's talk about the whole Roaring Kitty situation. Yeah, so something interesting happened yesterday where GME just started moonshotting. I was literally happening. I happened to be watching this while I was trading, and I was like, okay, what the hell is GME doing right now? This thing went up a massive 13% in one day. Okay, this is actually the largest candle that we've seen on GME since basically back here August 5th. Okay, and what happened after this candle? Poof, upside. Okay, massive upside. Similar candle might be this one back here or this one back here. That was more chop, but usually these candles, when you get a big green candle like that at the bottom of a move, that's usually a more bullish sign, whereas this wasn't really at the bottom. It kind of had already moved up beforehand. So theoretically, these big green bullish candles in a downtrend is a more bullish signal. So you can see we're about to get the golden cross on the daily time frame here. But here's the thing I want to point out, okay? So I'm going to go over here to X. So you can see Wall Street Bets here. Shout out to them. They were the one that posted this. And this guy, Wolf of All Streets or something like that. So yeah, basically in short, there was a massive dark pool transaction for $92 million worth of GameStop. Okay, $92 million. I'm going to put this into context for you guys. 100 shares of GameStop as of right now is worth $2,185. A lot of people would consider $2,000 to be a lot of money. This is a huge amount of money. This is a whale transaction, okay? And I'm pretty sure Roaring Kitty is worth more than $100 million, probably a lot more. But regardless, 4.67 million shares purchased. That's an absolute staggering amount of money, okay? We're still watching Roaring Kitty. Again, this guy is kind of an anomaly. It's hard to explain what he's like. He's a fascinating dude. Let's just put it like that. I think that he's extremely intelligent and probably much more so than people ever give him credit for. And he's smart. He knows how to run with the big guys and even outsmart them in a lot of cases. So, in terms of what I think this means. Look, if I was a whale and I was looking to buy, I would want to wait until if I thought earnings was going to be bad and the markets were going to try to dump this, shorts were going to try to, throw it down to the ground like a stone. I'd be waiting until after earnings to buy this thing on a significant dip. Okay. I made a similar comparison with y'all when it comes to Bitcoin. So talked about this with Bitcoin. Okay. And again, this is how the whales think. This is how big money thinks about money. So again, if I was a whale on Bitcoin, what would I want to be doing? If I had $100,000 and I wanted to buy some Bitcoin, I'd buy down here at the bottom of this flag, $57,000 Bitcoin, and then I'd be looking to sell at the top of the flag. Guess what happens? Bitcoin moonshots roughly about 27%. You add $27,000 onto $100,000 because that's what 27% of $100,000 is. Now you have $127,000. Sell at the top here, and then Bitcoin goes back down. Now you add $127,000 at a $55,000 Bitcoin at the bottom of this flag. Now all of a sudden you have 2 Bitcoin, and you just rinse and repeat, and your stack grows. Okay. But the point here is the whales and institutions, they want to buy on the dip. They're not looking to chase this rally. Okay. They're looking to buy down here. In my opinion, the rally on Bitcoin, or not the rally, the dumps on Bitcoin is coming to an end. Okay. We're likely going to see upside from here. The whales and institutions and all the big money, they already loaded their bags. They're probably getting ready to pump the price, would be my guess. Okay. But if I go back here to GME, the point I want to make is that if I was a whale looking at this market, this would be a perfect time, in my opinion, to get in and start pumping the price. Okay. Because that's what these whales do. They'll use, their outlets or whatever to try to FUD the price. Then people sell the stock off, and then all of a sudden they want to buy the dip. And then they pump it, and then they talk about how great it is, and oh yeah, everything's all good. It's the best thing since gold or Snickers candy bars or whatever. And then all of a sudden you have a massive rip to the upside. And smart retail investors, I'm not saying retail is stupid. They ride the coattails of these whales to the upside. That's a smart move in my opinion. It is a little bit more risky to buy at kind of these lows because it could sell further. But for whales, not such a big deal because they've been doing this a long time and they know pretty much more or less the perfect time to get in. And they have a lot of money. So, they can afford to make mistakes. But the point I want to make here is, somebody buys $92 million worth at these lows and it pumps 15%. Let's actually say the pump was not 15%. Let's say the pump is actually going to be, let's say instead of it being 15%, the actual total move here is going to push us back up to $50. Okay. And I do think this is a possibility. I would not be surprised. Okay. That's 155% move. So that's roughly about a 2.5x your money. So if you got $92 million and you get a 2.5x on this move, well, you just turned your $92 million into $230 million. And if you cash out up there, guess what? You have another $140 million in your pocket to do whatever you want with. So that's kind of what I'm thinking is going on here. Again, nobody really knows if it's Roaring Kitty. It could be anybody. There's a lot of whales out there, a lot of institutions with a lot of money. We don't know. We'll just have to see how this plays out. Okay. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.